Hey, everybody. Welcome to Market Mavericks on a special edition. I'm coming to you from Las Vegas. You gentlemen look like you're in your normal places. Uh, so here we are, ready to discuss markets one more time here on a Thursday afternoon. And we have a lot to discuss. Let's talk about it. We got Bitcoin falling off a little mini cliff. I wouldn't say it's anything big. I'm sure, Scott, you're going to say it's just doing its thing here. This is pretty normal. But we do have the consumer. We heard from Walgreens today and from Levi's, the consumer struggling. And we have economic data tomorrow, the PCE data showing, we'll see what the inflation readings are. So where do we start, gentlemen? What do we do here?
I got some ideas. I remember there's a famous line from Alf, and when he was dating that girl in that movie. Oh, I got some ideas. What are we doing tonight? But I want to show you a few little things. You started off with.
Can I just say one thing? I would guarantee that 80% of our audience doesn't know what that is.
That is the best movie ever. Best Christmas movie ever. I can't help. Okay, if you have kids and you don't see Alf, you're not American. It's
all
like
right, fair enough.
Talladega Nights. That's just part of being American. So key top stories on the Bloomberg headlines. The economy shows further signs of slowing under high stress. What really caught me was the government marked down personal spending, and the quote was, "In the main engine of the economy." When I think of the main engine of the economy, I look over at diesel. That's what I show you here. Diesel demand is in a trajectory that's last time it was down this much was right before during the COVID crisis. And it didn't really start until the great financial crisis until after. And I show container board demand, which is more of a leading indicator, dropping hard. I mean, this stuff has been kicking in for a while. And then another top story in Bloomberg today was a bit of, it was this one. Excess savings are gone and the U.S. economy is bracing for impact. Just something we know is coming. It's all coming. So I can slow down, pivot there, but I think it really backs up the way where you started.
Yeah, I think this is a big deal. I mean, to me, it's like it's watching this slow train wreck, right? It's not something. I think too many investors, they hear you talking, Mike, and they're like, oh, he was bearish 6 months ago. Gareth, oh, he was bearish 6 months ago. But it's like this is something that doesn't happen overnight. Just like the real estate market doesn't collapse overnight. It takes time to play out. But these are the breadcrumbs that are being dropped, and this is where you have to start saying, okay, well, where do I protect myself if this happens? And maybe it doesn't, right? Maybe we're wrong here, but ultimately, I think being prepared is the number one thing an investor should do to protect assets in situations like what could be on the horizon. And I think we're starting to see it. And so, Scott, I mean, where do we protect our assets, buddy? Tell me.
Well, if you listen to Mike, then you do it in TLT, and I've got a position there, but you buy some treasuries in case things go bad. But the real store of value now, obviously, is anything that Roaring Kitty might vaguely tweet about. So if you want to protect your money, you got to know that Roaring Kitty is going to tweet a picture of a dog so that you can buy Chewy and Petco stock in advance. And if you're a little bit of a risk taker, you need to know that there's a Chewy Solana meme coin that you need to buy right before Roaring Kitty tweets a picture of a dog so you can go up 11,000%. I think the consumer is perfectly rich if they can gamble on this garbage.
That's a fair point. I mean, they obviously have disposable income, or they're just always right. If you get the insider scoop from Roaring Kitty, you're good to go.
I mean, the answer to me though is Bitcoin, right? Obviously, like I would say, you put your money in Bitcoin, a little bit of gold, some bonds, and you chill. But right now, it's hard to fade the stock market rally. And Mike, something we talked about on Spaces a bit this morning, I think it was really kind of a strong indication that this rally is continuing, at least for the moment, when Nvidia dropped dramatically over a few days, but other tech stocks made new highs in that rotation. So people clearly were not leaving Nvidia to go to cash and run off in advance of a recession they think is coming. They ran into the next big trade, which was obviously the Amazons of the world making new all-time highs. So, when you're making new highs, it's hard to get too bearish in the very short term.
Yeah, and to speak to that, I think that's a great point, is that when you come to the ends of rallies like this, and again, I don't know if it's the end of the rally, but there's a psychological nature where people don't want to be underexposed to the markets. They're too used to making money, and so they're not going to just pull their money out. And I think, Mike, you've talked about this before too, where hedge fund managers, they can't just be like, oh, I'm moving all to cash if they don't want to be in Nvidia. They have to be like, listen, I have to remain invested. So what hasn't run yet? Well, Nvidia is starting to stall. Let me put my money from Nvidia, and we've seen Nvidia pull back. Amazon, Google, and all of a sudden these stocks start to take off. So I think that's important to understand, is that it's only when fear grips everyone one, where that fear, the VIX, let's say the VIX spikes north of 20, where people will actually pull money out of the market. Other than that, it's just kind of a musical chairs.
Right.
Right.
But there has been a fear that if Nvidia saw a 5, 10, 15% quick drawdown, that would be the end of markets. And that's just not what happened in this case. So you have to pay attention to the fact that people still aren't scared, even with Nvidia, which was for that brief moment the largest company in the world, falling off a cliff effectively, that it didn't really hurt the other tech stocks. In fact,
although I do think it's worth noting that, like, if we look at Nvidia here, I mean, it only reversed what it had gained like the previous 4 trading days. So I mean, it's kind of, which is insane in considering it dropped from $140 to $120. I mean, it's $3.5 trillion at the highest market cap. But in reality, I mean, it was such an incredible run. I think a lot of investors can probably justify it that, hey, listen, it's, this was due to happen, right? It was just up far too fast. Yep. There you go.
So you touched on the 2 key things there. Is fear. The bigger fear right now for most people is the momentum being in it, certainly in equities. I show you big reasons why we have something that's really different, and that is unemployment's going up. We all know that doesn't stop at 4, it goes to 6, and it's crossed above CPI for the first time since 1982. But I want to tilt over to this other chart a little Bitcoin, and quote Roger Babson. I've been wrong on equities. I've been early. I've been wrong. I was wrong on crude oil 2 years ago, but it's going the wrong way. But and the thing is, when you're wrong like that, you have to admit it and move on. Roger Babson in 1929 said, I was presenting in September in Rapson College in Massachusetts, and his quote was, "I will tell you the same thing I said last year and the year before," and then it finally happened. That's how I feel now. So I want to show you the key things that's really been concerning me about Bitcoin. And this is one thing, as we talked about Bitcoin as a moving leading indicator. So let's use a 100-week moving average. This is what I see as, this is a maturing asset. Bitcoin versus a 100-week moving average, it just looks like it peaked again, but it's peaking at successively lower levels. That's what a maturing asset should do. Back in 2014, it was only 5 years old. Now it's over a decade, and it's looks like it put in a good peak. The thing is, look at and this is the S&P 500 versus its 100-week moving average. Bitcoin almost always peaks before it does, and S&P 500 is just on fumes. So good luck. You can be long as much as you want there. I want to show another thing that's been bothering me. Bitcoin versus the S&P 500. Right now, it takes 11 SPUs for 1 Bitcoin. Back at that peak in 2020, in 2021, it's like 15 SPUs. It looks like it peaked at 13. It's tilting lower, and there's a good reason for that to be peak like it did in 2017. We have volatility in the stock market, the lowest, and interest rates the highest since 2007, way below this low here. And I just want to show you one more chart that we can tilt over. This is a crocodile jaw pattern I'm really concerned of. So yeah, maybe this is Bitcoin alone overlaid with the S&P E-mini. Maybe we'll get lucky and it'll close and Bitcoin will go up. But the bigger risk is we've got more and more gaps in S&P 500 E-mini. We've never left a weekly gap since 1997. Now we left 2. And here's the problem. So that's just a mania kicking in. And maybe I think Bitcoin is becoming the smarter lead indicator and figuring it out.
Yeah, I think that's the key here too. Is and speaking of Bitcoin, I want to actually pivot to something that I think Scott has insight into. And we have seen Bitcoin fall, right? I mean, it fell down to 58,000 and change. Obviously, you're not concerned. This is normal Bitcoin price action. Is there a level where you would get concerned, Scott, in that regard? Like, is there any point, like, breaks 50, breaks 40, breaks 30? Like, is there anything that could happen? I mean, what about politically? Is there anything that could happen that would really scare you? Or is this just kind of a pullback before the next run?
I'm concerned as far as this particular cycle being over, or concerned like in the very long term? I mean, when I look at it in terms of this cycle, maybe I'd start to be concerned if we were under 50, right? Maybe all this price action, we really break down, get down into the 40s, stay down there. That would not be ideal. But like I can bring up the chart in a bit. Our largest pullback in this entire bull market has been 24%, which was this, I think, peak to trough 74 down to about 56.5. That would be a non-event in any of the previous bull markets where we saw 30, 40 plus, even 55% pullback in the last bull market of 2021, 20 and 2021. So, I mean, going down, if we're down 18% from the top right here, right from the 72 top. I mean, this is just nothing for Bitcoin.
Yeah.
It's less volatile right now than Meta. It's less volatile than a number of big tech stocks, 30-day annualized Bitcoin volatility. I mean, I have it here. It's 31%. I think Meta's 40%. You know, I just don't see much happening here. And fundamentally, yes, I think there are levels I would get concerned about, not long term. I think it goes up indefinitely because it's deflationary and we know they're going to print money. But I mean, we have nothing but tailwinds. We have a presidential debate tonight where odds are we're going to hear about Bitcoin and crypto in a favorable light, and there's going to be pressure from one candidate on the other. We have an Ethereum spot ETF that's going to launch next week. Gary Gensler has hinted at it. Bloomberg analysts have said that that's likely. Seemingly nobody talking about it because it's just been par for the course for this to become a Wall Street asset. And today, we have a Solana ETF filed by Van Eck. Now, I don't think that gets approved, if we're being honest, but they obviously think the winds have changed enough to pressure the SEC with a Solana ETF. I mean, Gary Gensler is having the worst day of his life. The Supreme Court ruled against them. We have the Solana ETF. Coinbase is suing the SEC and the FDIC today. So I just see nothing but tailwinds, unless, of course, you guys are completely right about the macro, and then it doesn't matter, right? All fundamentals are out the window if all correlations go to 1 in a major crash or bear market. But I don't see anything inherent to Bitcoin right now that's anything out of the ordinary or that is a significant headwind.
I got to piggyback on that a little. I look at that as I used to, when I used to run money and work with customers, I look at that as an environment. I'll tilt over to crude oil in a second. As environment you described is Bitcoin's underperforming beta. And there's a lot of reasons it should be outperforming other than the fact it's got the hangover from the ETFs at launch. So I look at that as if I'm running money in trading Bitcoin, I might be replacing my positions with some positive gamma call options, because if it's right, if Bitcoin lead indicator is right, and it's going to head lower, it's going to have a problem and show problems for everything. But if it's just a backup support and it's going to catch up to beta, and maybe we'll see that tonight, call option might do better, and maybe you get into lower volatility and do some kind of spread. But I think that's happening. The key thing is it's showing divergent weakness. And you mentioned all those positive things, but yet it's still not doing it.
I see it lacking. I just see that it's I don't see a divergent weakness. I see it as lacking correlation, which has been the pitch in my mind for Bitcoin the entire time. So listen, you're not wrong. Right? If you look at it based on the timeline since Bitcoin topped, obviously stocks have gone up, Bitcoin's gone down. Right? So it's indisputable that you're correct in that regard. People don't like to talk about Bitcoin being uncorrelated when it goes down. They really like to talk about when markets are sideways and Bitcoin goes up and hooray, we're uncorrelated. Look how great we're doing. But it's equally as important for your portfolio if you're an investor holding 1 to 5% and want an uncorrelated asset in your portfolio, for it to go down when other things go up, because you need it to actually be an idiosyncratic asset. And I personally look at it and see it behaving that way, but I also understand that I'm biased. That's my narrative. Makes sense.
That's the most important thing about it. I've always enjoyed that. You understand where your position is, your bias, and you have to admit when you're wrong. And that's so important.
Oh, well, I've been arguing with Bitcoin maxis for months that we would never see a Solana ETF, which could be correct, by the way, because they were saying once the door is unlocked for the ETH ETF, we would get Solana, Cum Rocket, Dog with Hat, etc. ETFs, because what's stopping it? And I made the argument that we need CME futures to get an ETF. Well, obviously Van Eck disagrees. Now, I think Van Eck is a great marketing move. I think they want to be first. I think they want to put pressure while the SEC is down. I don't think there's an expectation that this will get approved, but I didn't even think anyone would have the balls to file, to be quite frank.
So one thing I just want to point out, we were talking about how Bitcoin's come down while the stock market has still been at all-time highs, and now the stock market's just a fraction off all-time highs. But just one thing I want to point out here, I have the two charts. So one's Bitcoin from 2021 and one's the S&P from 2021. And what was interesting to me is that you had a top at the start of November in Bitcoin, and then it started to slowly come down, versus the top in the S&P, which was at the very start of January. So basically a 2 to 3 month lag. And what we see here is that we're basically 3 months ago was when we had the top at 74,000 approximately. And again, it's just a little bit of an interesting little data point there, that it does seem like the top in Bitcoin leads the stock market by 2 to 3 months. And so I'm just kind of watching over the next month to see if the S&P does come in a little bit more.
And to be fair, although it was a much shorter spread of time, the same thing happened in March 2020 on the COVID crash.
That's right.
Bitcoin bottomed 12 days, 13 days-ish before stocks did and before everything rallied massively. So there are times when I think when it's kind of in a panic, it does lead because it's liquid and it's Saturday or it's Sunday and you're going to dump the hell out of anything you can. And that makes a lot of sense.
Trades 3 times the volatility typically of beta. It used to be 10 times. Now it's 3. and it's 24/7. Yeah, it's the leading indicator. And that, I like the chart you showed, Gareth, 'cause it's really similar to the one I showed earlier. It's, you see a maturing child of an asset. It's if you can show it, but I understand if you can show.
Yep.
And it's pumped up to a good level, and it's leading the S&P 500, and it's tilting lower. So after tonight, after today, after the end of the Q1, 1H today, if Bitcoin's not doing it, then we might start seeing the sell stops kicking in, and maybe some of that in the equity market. But July is typically a good time, certainly July 4th. So I look at it as, this leading indicator is leading, and right now it's showing problems. And then I just have to remember, having been quite involved, as you remember when futures were launched, that put in a pretty good peak in a similar type of environment. And we find the ETFs launching in Bitcoin was the biggest launch of ETFs ever. It's kind of hard to not look at that as a bit of a significant peak. And so far it's showing that. And
Yeah,
potentially an
absolutely.
all risk asset. It could be one of those things you look back upon as an all risk asset.
Yeah, Scott, I saw you pop this up, and I wanted to show people this. Can you explain this to people? I think it's a very interesting chart.
Yeah.
Well, I think it's interesting, although I think we can discuss whether this time is the same or this time is different, right? Tech weight in S&P 500 surges. The highest it ever was, of course, was basically the dot-com boom and bust in the late 90s, early 2000s. The sector is now closing in on the 35% record weight for dot-com. I mean, basically, tech has become about 35% of the total value, whatever, of the S&P. Interesting. I posted this chart earlier, and I had a lot of people say, yeah, you're comparing NetTaxi and Pets.com to NVIDIA and Microsoft, and it's not the same. We had Cisco.
Yeah, I would say Cisco is the equivalent of NVIDIA, not Pets.com.
I do agree. Listen, like in a world where technology advances, to compare something 24 years later when we know about the speed of innovation and how important technology has become in that time. Listen, it should be a higher weight. I do agree with that, but I do think it's worth paying attention to it as a potential signal, or at least that's clearly what Bloomberg's hinting at, right?
And so I would just add one thing quick, Mike. I would just add is that you're not really comparing those things together. What you're doing is you're comparing human nature. Remember that the greed was the same in 99, 2000 as greed is today. Humans don't change over time, and so they tend to act the same way. Mike, please jump in. Yeah.
You nailed it, Gareth. You did it for me. I'm reading the book right now, The Devil Take the Hindmost by Edward Chancellor. I just read his other book called The Price of Time. You said exactly what I wanted to say, and that is, this has been since the beginning of recordable time. We've always had manias like this, and they've always similar. Human nature will never change, and we're in one now. You just don't always know it. So yeah, some people are wrong and early, but there's alternatives that have been doing quite well. It was Bitcoin for a while. ETH did great. GBTC did great. TLT hasn't yet, but gold has. And at some point, typically what happens if things are beat up, the more do the best. So I think it's a matter of time that we'll do that. It's questions when's it single. So here we are. So it's first half, S&P 500 total return 16%, more than I thought, but that's classic mania. If it keeps going up, it's fine, but that's when I tilt over to it. Unless that keeps going up, which I see just a little bit of reversion potential in crude oil, I see pretty significant deflation kicking in on just normalization of markets, not anything particular.
Yeah, and I think that's such an important point, is because I would just point out that people say, well, AI is going to change the world, and like I was very young when the internet just kind of was coming out in the mid to late 90s. But I mean, talk about changing lives. The internet was, that just totally changed things. I can't even think back to prior internet age when you didn't have a phone where you could go surfing on the net and everything. Maybe life was better back then.
Mike and I can. I showed up to my freshman year of college at Penn, and they said, what do you want your email address to be? It was 1995, and I said, what the hell is your email address?
Cool. I love that.
The first social media platform I was on was called Friendster. I don't know if anyone
Friendster was amazing. Never fade Friendster. MySpace was the peak of human civilization.
If you didn't have Tom as a friend, you were no one,
Yeah. So listen, I got to point this out, obviously, because I think it's important if we're having a show that's about what's happening in the very short term, because tomorrow we have effectively the largest Bitcoin Ether options expiry in history, which we talk about how it's going to be volatile every time, and then it tends to not be as volatile as it once was. But 25% of these options are expiring into money. The notional is going to erase, I think, effectively like 40% of the positions entirely off the books. So we should have a lot less leverage in the system. And of course, this time it aligns with the mythical triple witching, in traditional markets where we have stock options, stock index futures, and stock index options. I think, I might have repeated, but all at the same time. So tomorrow is one of the 4 biggest days of options expiries in all markets. I think, Mike, that might be why July 4th kind of tends to look so good, because you get a lot of crap off the books before everyone goes on vacation here at the end of June. But and that's coinciding here with a huge one in Bitcoin. And what's interesting about the Bitcoin options expiry tomorrow is we often see that max pain level where the most people would, basically lose and expire out of the money. It's not really that close this time, so there's no reason really for anyone to push the price down to cause that max pain or anything, which is something that has happened many times in the past.
Interesting. Yeah. So, do you think that could make tomorrow more volatile, or just because
it should? I mean, it should. I don't know that it will or it won't, but in theory, it should. And with Bitcoin sitting kind of at like a very macro support level here in the 60 to 61-ish area, it could be the catalyst in either direction. But frankly, like, we know it's a boring summer, man. Who cares? It'll go one way, it'll go the other way, then it'll go back the other way and liquidate all the other people, and then it'll settle right back at 61.5 and.
Well, don't forget tomorrow morning we have PCE data too. So I mean, I think most people after the CPI recently are basically saying, "Oh, it's not going to be bad. It's going to be fine. It's going to show basically no change." Mike, do you have any views on that? I mean, I know you're in the ultimate deflationary camp, but do you think this number comes in as a nothing burger, or what are you thinking?
The trend has been weaker than expected, and I wanted to show this chart. So I think it's one of those things that it's a nothing burger, but people wait for it, which means they don't trade until it comes out. And regardless what it is, oftentimes it just trigger to trade. But the trend has been weaker than expected, like the data I showed earlier. But this is one key thing. I'm publishing my mid-year commodities outlook, the full thing tomorrow, but I've been publishing sections. And this is what I'm going to show you why. First of all, let's look at WT crude oil. I think it's going to 40. It has since 1980 been pivoting around those levels. Since the peak in 2008, every single low has been below 40. Maybe it's different this time. It's consolidating like it did in 2014, right before it broke down. But I overlay this with one key thing that's different, is that's the S&P 500 divided by GDP. In terms of market cap, it's 2 times GDP. The last time we were here and this same level, it was about the same as GDP. And some of the kind of things that I think people don't see as much as crude oil normally should break down. That's deflation. But if you get a little bit of reversion in the stock market at the same time, that's normal deflation worthy of the inflation. There's another thing a lot of people are probably not aware of is copper looks like it's breaking down hard. And there's a good reason. Managed money net positions, futures positions got the longest since the peak in 2021. Recently, they're turning lower. And there's one top reason this Dr. Copper is potentially going lower. Is look at this. This is Chinese government CGB's 10-year bond yield at 2.2%. That's part of the reason I think TLTs or U.S. 10-year notes are going to that price eventually. All we need is a little bit of correction in the stock market, crude oil going down, and the dominoes tumble for deflation, which is normal after what's happened, but it's already happening in China. So to me, that's so important to see what's happening in the rest of the world. And typically, bond markets are good leading indicators of economic activity. And bond yields, which I'll end with this, that 10-year note at 4.29 and Fed funds 100 basis points higher. The things that used to matter at some point will, but they will accelerate when we just have a little back and fill in beta.
Yeah, just jumping in here, you just mentioned copper's drop, and one chart I wanted to just show people is this is nickel, and nickel has collapsed 21% in just over a month, almost straight down. I mean, almost just getting a little technical bounce today. But if you look at some of these other commodities like aluminum and various other ones, a lot of them have fallen 10, 15+% in just the last month. So there's a big drawdown here, and I'm assuming, and correct me if I'm wrong, guys, but number one, China supposedly was doing all this stimulus. Their economy's really not kicking into gear like I think people thought it was going to following a lot of the stimulus. Their housing market is still in tatters. Then you get the US, which is needless to say slowing down. We're starting to see a little bit more weak data here. And if you get the US and China to be in these recessionary periods at the same time, that is not good for demand for a lot of these things like copper. as well as these other metals, including oil. And I think this goes to your call for oil to go a lot lower. It makes a lot of sense with all the production out there in the U.S. and stuff that if the economy here weakens enough, oil's going sharply lower.
So why is production going up? Why is corn supply high? It's all because of the higher prices. Commodities go down because they went up. It's that typical cycle. It's one thing I just wanted to show you. Wheat potentially bouncing, but that's the thing about wheat. That's just today. But overall, the U.S. exports more than 50% of the wheat because we get much more money out of corn and soybeans, and there's massive supply. We're basically the world reserve of wheat. It's a little bit of bounce there, but I want to show you one chart that most people probably haven't seen yet. Yeah, everybody thinks about debt to GDP, and everybody knows it's rising, it's unsustainable, it's bad. Let's look at that number, $34 trillion. That's a total U.S. debt, but take debt to stock market capitalization might show you kind of what the problem is. Debt to stock market capitalization, right before the crisis, total debt was 50% of total U.S. stock market capitalization, which is right around $56 trillion. Now it's 61%. It's not a big deal. So what's the problem there? Debt's going up a lot. It's stock market capitalization that's going up a real lot. So I overlay this with the S&P, the gold versus S&P 500 ratio. It's buried. It just looks to me like just get a little bit of move higher in this. Which means beta going down. That's just, I think that's a launch pad for gold, which is already starting.
Hey, Mike, what's the price of a barrel of oil at the election that wins it for Biden?
There you go. So that's the thing
without going into a depression.
Yeah, so it looks like he might have sealed his fate shockingly with his pitch tilt on cryptos. Like, well, welcome to the real world, big guy. I mean, that was just silly to not understand what's happening with this rapidly advancing technology, going to the Dow, going to treasuries and vetoing that recent bill. So the thing is, I don't know if that's going to save him, but the average cost of production, the world's largest producer and net export for crude oil is $55 a barrel. And it's just a matter of time that it goes there. If you look at the lessons of history, you always go to the cost of production in one of the largest producers, unless they're major exporters like Saudi Arabia. So it's going that way. The key thing about if Trump is elected, you almost guaranteed you're going to drill at will, which means pressures on crude oil, which is part of a deflationary factor, which is offsetting a lot of the inflation things that people are saying he might institute.
What are you guys thinking in terms of the debate tonight? And I'm not getting political. I'm just curious. Like the debate, this is one of the earliest debates I think ever. And is it done? I'm kind of contemplating, like, is it done because if either of them really screw up, there's an opportunity to get like what I'm thinking is if Biden comes up there and is like looks like he's lost and totally out of it, they can slip another candidate in there. It's early enough still.
A lot of people saying that. What I think people are going to be watching is for Biden's state of being. In his state of mind, to be quite honest, because, well, but to be fair, like I don't have an opinion on it necessarily. If you look at the media, you think that he's a bumbling idiot, can't find his way down the stairs, doesn't know which direction. But the guy showed up and did the State of the Union address, and people complimented and said it was spectacular. Sure. So on live TV, unedited for an hour or 2 hours, I think what people are mostly watching for is not what they say, but how they compose themselves, specifically with Biden. So I do think what you're saying is partially it. But listen, even if you end up disagreeing with Biden, but he shows up and looks like a president, looks presidential and can answer questions, I think that's going to cause a lot of surprise. So I'm really curious as to how often I'm getting deep faked or manipulated by the media, or if that's a true picture of either of them. Because to be quite frank, I have my feelings about both. I don't do politics, as you said. I happened to listen to the All In podcast, which I don't usually do, with Trump recently. And I thought Trump sounded a lot more measured and reasonable than I've ever heard him sound in the past. So it made me wonder if, we're getting even an accurate appraisal of him. I don't believe anything anymore. That's the problem. So I just want to see the two guys for 2 hours with a camera on them unedited and see who these guys are at this point in time. That's what I personally am watching for.
Biden has a complete advantage because of the benefit of low expectations. And Trump campaign realizes it now and saying he's on performance enhancement drugs. It's just so silly. My colleague, Jonathan Levin, pointed that out to me. The journalists really know what's going on. And I think he's going to crush it because the expectations are so low.
Such a good point. Biden to have a good debate literally just has to be a functioning.
He has to make normal sentences.
Yeah, you're right. That's what I'm saying. So that's what I'm saying.
No, I think you guys are right. And so I will go on record and say this is probably going to be one of the most watched debates in history
Yeah.
just from this aspect. People are just so curious about these two candidates. It's almost like Jake Paul and Tyson or whatever, It's like
It's a
this is
spectacle
the big
now.
one. They
It's
should be
not
doing
because anybody
pay-per-view.
wants to hear what they seriously have
It
to
might
say.
be
It's because
historic.
people just want to see what happens. Yeah.
Yep. All right, guys. On that note, I think we can wrap it up today for Market Mavericks. Thank you, gentlemen, so much for joining again on a Thursday afternoon. We'll be back next Thursday at 3 p.m. Thank you, everyone who is watching. Great showing today. And just watch that PCE data tomorrow. Let's see what the markets and crypto do. Have a good one, guys. Take care.
Cheers.